Good morning, everyone. This is Marshall Giller bringing you the morning comment for December 24th. It was only 6 months ago that the third revision of the first quarter U.S. GDP shocked the market with a big downward revision. Now, the opposite, a big upward revision to third quarter GDP to 5% on a quarter-on-quarter seasonally adjusted annualized basis. So, in just 6 months, the U.S. economy has gone from recession-level contraction to the fastest rate of growth in over a decade. The rest of the U.S. indicators out yesterday were mixed, but that didn't matter. The markets focused on the GDP figures. U.S. interest rates jumped, and as a result, the dollar rose against almost all the G10 currencies and hit a high for the year against several. This is the trend that I expect to dominate the FX market during 2015. U.S. economic outperformance leading to higher interest rates and dollar outperformance. Oil rallied on the higher U.S. GDP figure on hopes that faster economic growth might boost demand for energy. But the weather suggests otherwise. While the market's focused on oil prices, natural gas prices have been falling too. In the case of natural gas, it's because of unseasonably warm weather in the U.S. The price is now at a 2-year low. That means more money for consumers, but less money spent on fuel. The second round of the Greek presidential election failed to elect the government's candidates, Stavros Dimas. He got only 168 votes, which was in the middle of expectations. The Greek press is reporting that it, quote, "it currently seems very difficult," unquote, for the government to get the 180 votes that it needs on December 29th, and that a general election in late January or late February, quote, "seems inevitable," unquote. That could be a sensitive time for Eurodollar. The market's already gone through the consensus forecast for the first quarter of 2015, which is 122 for Eurodollar, according to Bloomberg. And so it would probably come as a surprise to move lower, meaning there could be a lot of position adjusting. Now we've got almost nothing on today's agenda. The only noteworthy indicator we get is the U.S. initial jobless claims for the weekend of December 20th. The market consensus is for the number to remain more or less unchanged. The 4-week moving average is expected to decline a bit, consistent with an improving labor market. Now, there will be no video on Thursday or Friday. Happy holidays. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gitler, head of Global FX Strategy at IronFX Global, wishing you solid trading.